Hi, and welcome to Real Estate Real Talk with Sesta podcast. Today, we're going to talk about insurance, mortgages, and how that affects buying and selling homes. We have some great information to share, and you don't want to miss this. Don't go away. Looks like we are live. Welcome to Real Talk with Sesta's podcast, and I want to thank our special guest today. We have Monica from the Kai's Company, and we also have Toni from Interconnect. Welcome.
Thank you so much. Thanks for having us.
Yeah, absolutely. Thanks for coming on. So we just want to kind of get into some information, concerning mortgages and insurance. So first off, let's go with Toni. Tell us a little bit about yourself and your experience and the company you represent.
Yeah, so I actually own Interconnect Mortgage. I'm a broker business here in Palm Beach County. Been in the mortgage business for 31 years, so been around for, a minute or two, and have ridden the waves, ups and downs. Midwest girl originally, been in Florida for over 30 years now. So this is home, and love what we do. And, basically our goal is to obviously help people achieve home ownership or to increase their real estate portfolio and help real estate agents and other people in professions grow their businesses as well.
Awesome. And Monica?
Yeah, so my name is Monica Ojeda. I work with Kai's Insurance. So we mostly help real estate agents to get insurance for their real estate transactions. We do write insurance for other people. We can write insurance for anybody in the state of Florida. So I am a native Floridian. I was born and raised in West Palm Beach. So I've lived here my entire life. And the insurance market has gotten, a little crazy. So we can help people kind of navigate through that.
Absolutely. And about how long you've been in the business?
About 18 years I've been writing insurance.
So you've been in it for a while. That's great. So we've all been in the business almost about the same time. That's very good.
Yeah.
Very good. So let's start out with Toni. So Toni, what's going on with interest rates? As a realtor, we get buyers that are kind of on the fence saying, well, we kind of want to wait till the prices go down. And then I try to explain, well, if the prices may go down, but the insurance rates go up, you're kind of fighting a losing battle. So tell us a little bit about interest rates, where you see them going, and your take on that.
Yeah, so you're right. And this is a conversation that we have a lot with people on a daily basis. So there's a lot of conflicting perspectives on what the future is going to bring for us. And there's a lot of dynamics that obviously play into this. So mortgage interest rates are tied to the bonds. And typically, as a rule of thumb, if the bonds are going down, the rates are going up. And if the bonds are going up, then the rates are coming down. Well, there's obviously a lot of different variables that play into that. This whole COVID craziness has absolutely been a part of that. But one of the other things that we're, hearing a lot about is going into the future is that if the Fed backs off of buying mortgage-backed securities, then it is possible that it will increase the interest rates because the bonds are going to drop. The value won't, they buy mortgage-backed bonds, right? And so if there's no demand for those bonds, then the price of those is going to go down and the increase of the rates is as a result going to go up. There's other people that believe because of inflation, which we all know that we're facing. We see that at the grocery store, or we see that at the gas pump and pretty much any place else that you're living life, that they've got to be careful. We have to be real careful. If they allow the rates to go up substantially, then that's going to, compound the economy issues and things of that nature. So a lot of things happening, but I want to lean into your point about waiting. And that's a question that we hear all the time. Are the values going to go down? Is there going to be an impact because of what's happened? And there's several things that play in here. One is, go back in history, we, those of us that have been around for a while experienced the meltdown period from 8 to 11. And that was obviously, I always say I need the men in black to come in and erase my memory because those were some rough years. We're not in the same market. It's an entirely different animal today. The mortgage industry is very different than it was back then. Lending is still very controlled. The rules are very tight. People have more equity in their homes now than they ever have in the history So that in and of itself, if there were to be some kind of a, crunch, people have equity. They're not going to walk away from that. They're going to sell their homes if push came to shove. Foreclosures that are at a very normal level. So there's no indication that people who might have taken advantage of deferments and things like that are going into default. They're remedying those things. They're getting back
Right.
on track and they're making their mortgage payments. So to go back to the question about waiting, I want to use an example because you had a property that sold earlier this year up in Jensen Beach. You sold it for $700,000.
Correct.
And based on the appreciation, that house now is probably worth roughly $730,000,
Correct.
give or take. And you could tell us better. That's your area of expertise, obviously. But so July to the very beginning of December, $30,000 in appreciation. Well, if the rates had even moved a half a point, it would have made a difference in that particular transaction of roughly $150 a month. So do you want to wait and hope the rates are going to move and give up $30,000 worth of equity appreciation in 6 months? Or do you
Right.
want to
Right.
go ahead and take that rate and pay maybe what you think is going to be a little bit extra? You're still way ahead from an equity standpoint. Here's
Absolutely.
the other piece. If these bonds go down and these rates go up, there's also some indications and talk that they think that'll be temporary and they could peel back again. The good
Right.
news is appreciation forecasts are still very strong. So
Absolutely.
the professionals are calling for the next 18 months that we're going to continue to see very strong appreciation rates. So I think it's important, if you want to own a home, buy that home sooner than later and
Right.
understand that that equity appreciation is far greater than the difference in the fluctuation of an interest rate when you're talking about, the gains and the pros and the cons of waiting versus, what these rates are going to do.
Right. So what are the current rate now approximately?
Yeah, so it depends. Government loans typically run a little bit lower, and we're locking loans still for government stuff in the twos, two and a half, two and three
Uh-huh.
quarters, depending on credit score. There's a lot of variables that play into the interest rate.
Uh-huh.
Conventional loans are in the low threes, three and three eighths, three and a half. And again, depending on credit scores,
Right.
depending on loan to values, and even depending on the size of the transaction, which, I don't know if you saw this week, but they just increased the conventional loan limits.
Yes.
Now we're going to be looking at a $647,000 conventional loan limit, which is great. People before would have been faced with jumbo terms, which are typically a little different than what they are for the conventional
Absolutely.
and the government transactions.
Right. So as far as your forecast, I know you don't have a crystal ball, but where
Yeah,
do you see rates staying this way for a while? Do you think they're going to go up, or what's your feeling on
yeah.
that?
I think that we're going to see, I would expect that we might see a little bit of a tick up. I don't think it's going to be substantial. I don't think we're talking about jumping up 2 or 3 points.
Right.
I think that we could see it get up into, in what I would call a normal range because we've really been below any kind of a
Absolutely.
normal range for a
For
really
a
long
while.
time.
Yeah.
Yeah,
Right.
yeah. But
Yeah, I see a
man, if
lot
I
of
had that crystal
predictions.
ball,
Yeah, I see a lot of predictions, on the internet, at NAR and all the people saying that, three and a half, 3.8. They don't, but I don't see anything like you said that's really showing that it's going to go crazy. But what is it? What does a half a point do to a loan?
yeah, in that house that you had sold, I ran that at a $500,000 loan, and it only comes in at $150 difference in
Right.
a monthly payment for 50 basis points.
Right.
So, when you factor, go back to that equity appreciation versus that difference in that monthly payment, I just don't even know how you can make that comparison. If you want to build wealth,
Right.
if you want to get the gains of that instead of continuing to pay a landlord or, miss out, it's just, there's too many
And that's
reasons and too many
and that's
benefits.
that's the point I try to drive home to a lot of people because they say, "Well, you're a realtor, and it's always a good time to buy." And that it's like we're not like that. If I've
Right.
talked people out of buying homes that I felt that they shouldn't be in, for one reason or another. But really, what's the alternative? Paying rent? Where does that money go? Do you have a chance of
Yeah.
appreciation? You know what the average rent in Port St. Lucie is right now?
I don't, but I know it's going to be painful. Tell us.
It's about $2,500 a month.
Yeah.
I
Wow.
mean that,
Wow.
yeah. And we're talking about, just a year or two ago, you could find something for 15, 16, 17. It's not happening. You got a
Yeah.
condo, two bedroom, two bath condo, you're looking at 15, 16, 17, $1,800. So what's the alternative? I mean, to me, even if real estate stays the same, the pricing stays the same, you're locked in. You know, you don't have to worry about your landlord 12 months later, because that's what's going on now too, is a lot of the landlords, the people that were paying that 15, 1600, 1800 a year, their lease is up and they're jumping them up, you know,
Yeah.
or making them move.
Yeah.
So where do you go? You know, where do you go? So maybe for investments or second homes, you know, you may want to, you know, you could play that game. Well, maybe I'll wait, maybe I won't. Well, it's like having a second or third car. You know, it's kind of nice to have, but it's not necessary. But if you're talking about a primary residence and you in between buying and renting, to me, it's a no-brainer because of the interest rates. My first home in the 80s cost me 10.5%. I mean, that was my first home. Yes, the prices were a lot lower, but that was, I mean, it was high. You know, now we're talking about, we've been under 6 for a couple of years now.
Yeah, a long time. We haven't seen 6 in a decade.
Right,
You know, so
right.
it's really, they've been really incredible. And I'm like you, Andrew, I bought my first house. I built my first home in Port St. Lucie in 1994, and the rates back then were 7.5% and 8%.
Right.
So what a difference.
Yeah, what a difference. Absolutely. So, well, I
Yeah.
appreciate that. So, Monica, what's going on with insurance? Oh my goodness.
Everyone's favorite topic right now is insurance.
Well, I
So
know
we get a
I
lot of,
called you. I know I called you a couple weeks ago when I got my renewal, and I thought, oh my God, it's like almost double. Let's shop
hmm
around. And when I shopped around, it was even worse. So I'm like, all right, Monica, let's just
they
book it
were.
in there. Yeah, because
That's what,
amazing.
yeah. That's what we're seeing a lot right now is people are shopping it, and when they shop it, they're not finding anything better.
Not at
So we're
all.
seeing that a lot right now because what's happened is a few things that have all created sort of a perfect storm of a little bit of a mess with the insurance industry right now. So it's we haven't had, like, people keep saying, people call me all the time, and what they say is we didn't have any storms this year. And then they also say, I've never filed a claim. So we'll start with the definition of insurance. The definition of insurance is risk spread out over a pool. In this case, the pool is Florida. So if there is a hurricane in Pensacola, that impacts you in St. Lucie County because you're in the pool with the people in Pensacola.
Correct.
So just because you don't have a claim on your own property, it's counterintuitive, I'm sure, but that really doesn't matter that much in the grand scheme of things. In the grand scheme of things, it doesn't matter on your policy. However, people filing frivolous claims and frivolous lawsuits does have a huge impact on the rates. And that's kind of part of what's happened in Florida is that we've had a lot of lawsuits. We have a one-way attorney situation where you might have a $12,000 claim that gets paid out and you decide, hey, that's not enough money. I think I should get more from the insurance company, and maybe you should. And you decide to hire an attorney, and the attorney gets you $14,000 instead of 12, but the attorney gets paid $120,000, and that is not an exaggeration. That's an actual case that happened. So this is happening every day. So when the insurance companies have to pay out these attorneys because of the way that our statutes are written, then that impacts all the rates. And there's, reinsurance, there's all kinds of things that are playing into this. So the hurricanes aren't the only thing. There's roof fraud as well. There's been a lot of situations where a person has a little bit of damage to their roof, and because of the way the Florida statutes are written, their entire roof gets replaced, not through any fault of their own. They're just following the law. It's not that these people, homeowners are doing anything wrong. They're just getting what is due to them on the insurance policy. But as a result of that, all the rates continue to climb. And also a lot of carriers, because of the way that reinsurance is set up, if they can't get the reinsurance or they can't afford to pay the reinsurance and keep their ratios in check with the amount of policies they have to shed policies to get rid of some of those policies. So now we have a situation where a lot of the carriers who might be more affordable are no longer writing in your area. So now we have to go to the more expensive carriers to get you a policy because there's only 2 or 3 carriers that are actually writing in the state of Florida in your little, area or your county your zip code, whatever the case may be. In Tri-County, it's particularly rough right now in Dade, Broward, and Palm Beach.
Oh, wow.
But it's starting to creep up into Martin and St. Lucie. You're seeing that happen
Absolutely.
every day.
Absolutely.
So, yeah, so we're starting to see where insurers are having a really hard time with the amount of risk tolerance, because if they're charging, yeah, I mean, it just makes common sense. If they're charging you $2,500 for your insurance and they're having to pay an attorney $200,000 on one case, those numbers do not add up in any way. No matter how big you make that pool, it's not going to be big enough to pay that fee.
Right.
So,
Yeah, I know that not too long ago, I got a phone call just out of the blue asking me if I wanted a free roof analysis to see if there was any issues with my roof and that we could probably get a new roof for you. And I was like, oh, really? No, well, I'm good. I live in an association. They take care of that. Thank you. But I hear that happening a lot where they're actually now soliciting to try to get
They
in
are.
people's houses and get people a new roof, like it's like free candy, but as an end result, we all pay for that.
we all pay for that. So it seems enticing to get a free roof, and
Right.
and it seems like something you would want to do. Who wouldn't want a free roof? Roofs are very expensive,
Right.
but it's also a problem with statute. So it has to be addressed in the legislature to some degree, but it also can be addressed by just people not taking advantage of the system. So
Right.
I know, it is enticing if you can get a free roof from your insurance company. It seems like no one's being harmed, but who's being harmed is actually you and all your
Right.
neighbors. So it's better if you
Right.
can, just be, get what actually you deserve. But sometimes it's not even people's fault. So we've had situations where someone has, say, a tile roof and they've got 10 cracked tiles, and the manufacturer who made those tiles no longer is in business, or they don't make that particular tile anymore. So by law, the insurance company has to replace that entire roof. And we've had situations where that roof could be $50,000 over
Right.
10 cracked tiles. So, and that's not the homeowner's fault. The company has to do it. They can't say no. The
Right.
homeowner can't say no. They have to do it. That's the law. So,
Right.
it's not, I'm not necessarily throwing everything onto the homeowner. A lot of it's just the way the law is written right now.
Sure. Absolutely. So Bridget says, I've had multiple people knocking on my door offering that. That's amazing. So it's an actual thing that people are really going out there trying to sell people new roofs.
Yes,
You
it's
know?
very lucrative for the roofing companies to do that.
Absolutely. Wow.
So, yeah,
So
they
you
found
find
the loophole and they're exploiting it. So
they're
it's,
exploiting it.
you know.
Absolutely.
uh-huh.
So I know we spoke over the phone when I was doing mine that you had told me that some people can't even get insurance right now. Is that what happens?
That's true. So a lot of the carriers are having a lot of roof, as you can imagine, with all this going on, they're being very picky about the roofs. So we've got a lot of carriers that'll take no more than a 10-year-old roof. We've got some carriers that'll take no more than an 8-year-old roof.
Wow.
So if your roof is a little bit older, it can become a little bit tricky. If you live on the coast, it can become a little bit tricky to get a policy. If your roof is in poor condition, or a lot of the carriers are becoming much more particular. Just yesterday, Citizens put out a bulletin that now as long as I've been, around, it's been 30 years old or older, you need a 4-point inspection.
Right.
They just put out a bulletin yesterday. Now it's going to be 20 years for Citizens that you're going to be required to have a 4-point inspection. So they're going to be scrutinizing that 4 points. If there's anything going on with your electrical panel, or there's anything going on with your plumbing, we're not going to be able to bind that policy until that gets resolved.
Wow.
So there can't really be any deficiencies. We used to be able to, there's times when we can, and obviously I would encourage you to, reach out, and I can always go over that with you and let you know. But there used to be a time when we could bind the policy, let the insurance company know, and then they would give 30 days or 60 days or 90 days for you to repair that situation. If you had an electrical panel that needed repaired and you were purchasing the home, we could usually appeal to the underwriter, and they would kind of let us do it as long as you got that done in the first 30 or 60 days. Now it's really become where you have to have everything up to date, and everything, there needs to be no deficiencies on that 4-point
Wow.
before we can even bind the policy.
Wow. So Tony, how is this carrying over to you when you're pre-qualifying a client?
Yeah, so there's two ways, right? Obviously, the higher their premiums are, the more it affects their debt ratio, which ultimately compresses their buying power. The other piece is if you can't get the insurance, then you can't buy the house. So,
Right.
there's got to be a common space there. One of the ways that you can circumvent that is you could do a renovation type of transaction if it did, in fact, need a new roof or new plumbing or things like that. There are some programs out there that would allow you to buy the house and get the work done. And Monica could speak to, and I apologize, but I forget what they're called. Builder. There's some kind of a higher risk. Um, you tell me what it is because I know I'm going to say it wrong, and I don't
Oh,
want to.
it's
I don't
called
want to
it's
do
called a
that.
builder's risk. It's called a builder's risk
Okay.
policy. So yeah.
Okay.
Yeah, to get those things done. But yeah, I mean, you've got to be properly insured. There's not a mortgage company in the industry, private or otherwise, that's going to let you take out a mortgage and not have the proper insurance. One of the things that the mortgage companies require virtually across the board is they want replacement cost estimators or proof of replacement cost coverage on the property so that, God forbid, the house was destroyed, you're going to be able to rebuild that property. So it's
Right.
definitely an issue.
And
Right.
that's the other thing that's happened recently. I'm sure Tony's really well aware of it. Is that we're not allowed to give out replacement cost estimators anymore for insurance.
Yeah.
So we have to somehow satisfy that requirement another way. So that's become another little stumbling block on us, you know,
Yes.
Right.
working with the mortgage company, which
Yeah,
I'm
it's
sure they
almost like one
love.
part of the industry changes and they forgot to bring the other part of the industry into the conversation, and so there's this gap that happens, and they have to realign. So we see that most
Exactly.
companies were able to work through it, but it's definitely something that we have to navigate on a fairly regular basis.
Right. Right. So I know that I've talked to several people that are in the position where, they because we just went through, paying the taxes and insurance and your escrows, and I just got a nice letter in the mail myself about because my insurance went almost double. So now that's a deficiency in my escrow account. So now I have to make up for that so my monthly payment jumped $160 a month.
Hmm.
I don't owe a lot. I've lived very frugal. So for me, it's really not a big deal for that $160 a month. But I'm thinking about the people that have mortgages now of $2,000, $2,200 a month. And some people are telling me that they're jumping up to $3,000 more than the previous year. So you're talking about, a couple of $100, $300, $400 a month difference that so we're not dealing with the adjustable rate mortgage where that bumped it up, but now we're dealing with the insurance. Are you seeing a lot of that, Tony?
Yeah, absolutely. And the property taxes, it kind of, you're getting hit from both directions. And what
Right.
happens is your mortgage servicer for your property taxes, if you're escrowed by law, has to pay the taxes in November when you get the greatest discount on your tax bill. But they're still going to have to adjust your account. And what'll happen is even if you didn't have enough in your escrow account, they're going to pay it. And then
Right.
they're going to send you a letter and they're going to give you a couple choices. Number one is you could pay the difference and bring your account back up to, par, if you will. And then they're going to increase your payment no matter what, because they have to make sure that in the year going forward, you're saving enough to make sure that
Right.
you're on track to pay that next payment. So for somebody who doesn't have the ability to just drop that difference, now you're really faced with a really high jump because you have to prepare for next year's premium and make up for last year's
Right.
adjustment. So
Hmm.
it can be really, really impactful. We end up talking to a lot of people about doing refinances. The appreciation has been so great. That's an opportunity to say, hey, can we get rid of mortgage insurance if you're paying mortgage
Right.
insurance? Because of the appreciation moving at such a rapid pace. And you know what? A lot of people still have consumer debt. So it's an opportunity because of the equity to take it, and look at their situation specifically and explore, hey, can we do a debt consolidation so that we can get you freed up someplace else
Right.
so that you can afford to stay in this property and then get your escrow accounts balanced back out again.
Right. Right. Absolutely. Absolutely. Yeah. So there's a lot of things going on all at the same time. We have appreciation going on. We have, the insurance going up. We have taxes. A lot of people don't know how taxes work in the state of Florida. So they buy a home thinking, and they're pre-qualified on the current, rate of taxes. And then the next year, when it reassesses, they get hit with, out of clear blue. I have that conversation with all of my clients, and I got to tell you, probably 80% of them didn't even know that.
Yeah,
they
no,
weren't
you're
even
right.
aware.
So here's something. This is a great time of year to have this conversation. So if you bought a house earlier this year and the seller of that home had either vacated their residency and lost their homestead protection, or their homestead, or maybe last year there was another sale on that property, this year they could be faced with a very substantial hike. And there's a proration agreement that is signed at every closing that
Right.
allows you to go
Absolutely.
back to the seller and get them to rebalance those prorations. So I actually had acquired a property myself this year on the west coast of Florida, and the property bill jumped tremendously because the estate transferred out. They lost the homestead protection. This year, the hike took effect, and it ends up putting another $2,500 back in my pocket because the seller is responsible for that proration. So if somebody out there listening to this has bought a property this year and has seen a tremendous hike, then they may want to pull that out and go back to their title agent and say, hey, here's my tax bill. I'd like you to revisit the proper prorations on
Good
this and see
point.
whether or not I'm due any additional monies.
Good point. Because I hear that at every closing we sit down and listen to, but very, very rarely do I hear somebody going back and collecting. So that's a really good
Yeah.
point to bring out to
Well,
people
you're
that
overwhelmed, right? You're buying the house. There's a
sure.
lot going on. There's excitement. There's anxiety. There, you just put yourself into debt, and
Right,
so
right, right.
they walk out. And that to me, I feel like, and I know you're the same way. We're the extension. We've got to be the eyes and the ears and the memory and help guide them and remind them to pay attention to
Absolutely.
these things. Same thing with the homestead. I can't tell you. We remind people at the closing. We also send everybody at the new year
We do
their
too.
closing
Yep.
disclosure, and we remind them to get their homestead taken care of. And I still inevitably will have people that don't do it, and that's a very costly mistake.
Absolutely.
So it's just, as soon as you have that deed, and most counties allow us to do it online, it's really important that people get that done. And if ever you need help, just call any one of us. I know every one of
Yep.
us would be willing to walk them through whether we
Yep.
helped you acquire your property or not.
Yeah, absolutely. Yep. And it's funny. It's funny, but it's not funny because that happened to my own son. And if he's listening out there, I told you, I told you, I told you, do not forget to file for homestead. And he went not 1 year, but 2 years before he filed, and he kept arguing with me about why is my mortgage payment going up because you didn't homestead your property. So finally
Yeah.
this year he homesteaded, and yesterday he texted me. He's like, Dad, my mortgage payment went down like $300 a month. I said, now you've been paying that for 2 years now. That money would have been in your pocket,
Yeah.
but
Well, the worst
it
part about
happens.
that is he also, because he didn't file it, his
Appreciation.
adjustment could have jumped up
Yes,
tremendously. So he lost the
absolutely.
savings, and he
Right.
resulted in a higher annual tax bill before that
Absolutely.
savings started to apply.
Thankfully, yeah,
Yeah,
thankfully it was a small condo and didn't go up that high. But yeah, I mean, people don't realize it that, every little bit helps, and when you can lock
absolutely.
that in, why not? So
Yeah. Better in your
absolutely.
pocket than somebody else's.
Absolutely. Absolutely. So Monica, what else can you share with us about the current insurance market? Give us a couple of tips on maybe what a buyer should be looking for, or what questions should he be asking, or her be asking, maybe their agent or yourself, as far as when they're going out looking at these properties. What should they look for?
The best thing that you can do is a home that's newer. The newer the home, the better the rate, pretty much
Okay.
across the board. Because
Okay.
newer homes are built up to the hurricane code, the most updated hurricane code. So they're going to be the best rate. The roof is new. So, we can get some carriers that have those roof requirements that are 8 years or less. We can get some of those to come on board, and we can get those rates. They typically have, some lower rates. So the newer the home, the better. The newer the roof, the better. You always want to make sure that the plumbing, electrical, air conditioning, and roof are in good condition if it's an older home. Um, as far as rates go, a block home is always going to be better than a frame home for
Okay.
rates.
Mm-hmm.
Um, Not that it's a better home. I have people yell at me about this all the time. I'm not saying it's a
Yeah.
better home, but you
Right.
get
Right.
it. You
Just
get
for,
it.
yeah, insurance
This
purposes.
home has
Right.
been here since the 70s and nothing's ever happened to it, so I think it's fine. Yes, it is fine, but your rate's going to be better always with a masonry home. Um, if you have hurricane protection, that's not as big of a credit typically as people always think it is. But
I was
when
just going to
it
ask you
comes,
that. Yeah.
yeah. So hurricane protection, in order for you to get the credit, every single opening has to be protected. doors, windows, garage door, skylights have to be up to code if you have skylights. So every opening has to be protected up to the 2002 code in order for you to get the credit. So sometimes, if someone has 0 openings protected, the amount of the credit isn't going to be worth it for them to get all those openings protected because it can be very expensive.
Sure.
So it would take them 30 years to recoup that expense of protecting those windows. So sometimes we'd rather see them use that money to do something else. So for example, it's really important that you get a home inspector, and I'm sure you're probably going to have an episode where you talk to a home inspector, but
Absolutely.
It's very important that you have a home inspector that knows what they're doing, a home inspector that's done a lot of home inspections, that all they do is home inspections. You want a home inspector that does it for a living. You don't want
Right.
someone's uncle
You don't want
who
Joe
can do
down the
it
street,
because they have
right.
the license. You're
Right.
not saving money in the long run. You're really not,
Right.
because the cost of the inspection is, $400 or $500 for the inspection, and you
Right.
could potentially lose out on $1,000 credit if they don't complete the wind mitigation inspection correctly. So you
Right.
want somebody that really knows what they're doing and that does it all the time, and that's how they make their living, doing home inspections and the same person who does the home inspection can do the wind mitigation and the 4-point, which are the inspections that we require for insurance.
Awesome.
Yeah.
So quick question for you, and I get this question all the time. So you're talking about
Mhm.
8 to 10 years on a roof, or you're going to pay more. Does it matter what type of roof it is, whether it's metal, whether it's shingle, whether it's barrel tile?
Sure. Yeah, absolutely it does. So the shingle roof has less life expectancy overall. So that one
Okay.
is the one where we might see 8 to 10
8
years
to
where they
10
might
years. Okay.
allow us to do it. The shingle roof typically is a 15 to 20 year roof.
Right.
So it actually has a life expectancy of 15 to 20 years. But there are some insurance companies that will not insure it if it's over 10, because they're
Okay.
trying not to get into the situation where they're replacing your roof
You're replacing a roof.
because
Yeah,
you have
absolutely.
a little lifted shingle or something. They don't want to have to replace your roof for free when it has a little bit of damage. So they're trying to mitigate some of that law by not,
And what if it's a metal roof?
metal roofs are good for typically 40 to 50 years. They're very good. They last a really long time. A lot of people now are replacing their roofs with metal roofs. We're seeing it all the time. The metal roof is a little more expensive, but what I've been seeing lately, I don't know if you guys have been seeing it too, is that cost seems to be much closer than it used to be for
Yeah.
a metal roof versus a shingle roof or a tile
Almost.
roof. That it used to
Yeah.
be like so much more expensive to get the metal roof, but now I've been seeing the price really isn't that much different. So, and then a
So
tile
you don't
roof is
have
typically,
so you don't have that 8 to 10 years where they're not going to insure you. On a metal roof, you could get insurance up until it's 30, 40 years old,
right, on the metal roof, they'll
theoretically.
typically, that same carrier that's, 8 to 10 years will be 20 to 30 years on a metal roof. They'll let you go a lot
Wow.
longer.
Okay.
Yeah.
Oh, interesting.
So you can
Very
get a
interesting.
lot more time. But ultimately, if you get if you have a 30-year-old home or now a 20-year-old home with Citizens, and you get a 4-point inspection and you have 3 years remaining useful life, we can get insurance for the home. You're going to have to replace the roof in the first year, but we can get you insured and get you closed. So the
Okay.
3 years remaining useful life is what you need to know, because there is someone out
Remaining
there that
useful
will
life.
insure you as long as you have that. Yeah.
Okay. So that's the key to it. Awesome.
hmm
Awesome.
The remaining useful life of the roof is the really important number.
Awesome. And how about you, Tony? So let's say, what kind of advice would you give somebody that's out there right now buying? We already talked about not, waiting and that factor, but what kind of advice can you give people that are looking right now for a mortgage?
Don't assume what you can or can't do. Enroll a professional. I can't express that enough. It's interesting in our business that the mortgage, if you need financing, the mortgage is a really important component, and a lot of people don't start there. And really, that's the best place to start, even if you're not ready
Absolutely.
to do. If you're 3-6 months out, it's still the perfect time to start so that you can go to work on anything that might be an issue. The other thing I would tell you is that don't assume that you're not going to qualify. There are so many programs out there. We've had this rebirth of what we call non-QM programs, and they're done very different than they were in the past prior to the meltdown. Now there's, I call it skin in the game. There's larger down payment requirements, but there's a lot of flexibility with income documentation. There's forgiveness at a faster pace for any kind of adverse credit event. So you couldn't diagnose yourself of a major illness. Don't pre-underwrite yourself. Go get the professional and be prepared to provide the documentation. I think one of the things that, we take a lot of pride in is we do the due diligence up front, and that's really important. And I'll talk to people, and people will say, well, I don't need to do that. I know I'm qualified. And, what I would share with everybody is that's amazing. And it's not an issue of us not believing you. But if you're selling your house and you're going to take your house off the market, do you want to take your house off the market for somebody, the person you're buying from doesn't have any idea who you are. So you coming in and just saying I'm good, unfortunately, is not enough. Arm yourself, do the work, and that empowers you as their agent to go out, get them the property they want, negotiate the best deal, and to hedge out competing offers. And then the heavy lifting's out of the way, and you can focus on those things like the inspections. I'd much rather have all of that stuff done, and now you can really be focused on the inspection and the insurance component, which is where your attention should be at that point. And it makes it a lot less stressful of a process.
Absolutely.
So that would be the biggest thing I would say to people. It's never too soon. Enroll the experts.
That. We tell all our clients that's the first place you got to get started is get with a mortgage professional, your bank, or whoever is going to do your financing. And that's the person you need to speak to before we start even looking at anything, because you need to know what the numbers are. You need to know what you could qualify for. You need to know where the starting point is. So that's
Credit Karma too, Andrew. I mean, I think something that's worth mentioning, because most of the consumers, the Credit Karma has done a really great job at marketing to the public. And so people are operating that Credit Karma is going to be the driving variable. Credit Karma is a really great resource for you to verify that the information reporting in your credit bureau is the information that should be there. It is not the credit model that is utilized for mortgages. So when you get a Credit Karma credit score, that is not what your mortgage credit score is going to be. So it's a good indicator. It's helpful information. And then we'll have people that are very concerned about, hey, I don't want that hard inquiry. And here's what happens with a mortgage inquiry. So you can kind of dismiss that fear or concern, if you will. It's, mortgages obviously are not instant. You don't walk in, get your credit, and sign your loan on the same day. If you go to the mall or even a car dealership, you could probably buy 5 cars in the same day, and nobody would know the difference until you couldn't make your payments because you had overextended yourself. Mortgages are done very differently, and the government has been very intentional, and the credit model has been very intentional about not wanting to punish people, because having that inquiry done so that you can get an accurate analysis of your qualifications is really important. I always use the comparison that if you have a noise in your car engine and you go to the repair guy and you say, well, you can only look in my trunk, he is not going to diagnose what's going on with your car if the problem's under the hood. So we need to see the whole picture to be able to give people the right information that's relevant and specific to them so that they can move forward with confidence and not jeopardize money or time and the disappointment that can come from not taking those steps.
Awesome. Very good advice. Very good advice. So is anybody out there on Facebook, do you guys have any questions that you would like to ask one of us, or can we help you in any way? Just feel free to put it in the comments section, and we'll try to answer it for you. And if not on the live podcast, we can definitely jump on there and answer it anytime. So feel free to ask any questions you have, and we'll try to answer them. So Monica, let's wrap this up. So how can we get a hold of you if we need an insurance professional?
The best way to get in touch with me is to call me at 561-440-7575, or you can email me at monica@kaysquote.com, and Kays is spelled Keyes. Obviously, you have it on your screen, so you can see how to spell it.
And do you mind if I put that in the comments section after we finish here so they have it?
No, of course not.
Is that okay?
And one thing I was going to say, I was going to kind of back up what Toni said about getting started quickly.
Please do.
Your mortgage person can also, and I can also, we can get you an insurance quote on the home that you're looking at, so that you know, is this something I really want to pursue, or is this something that maybe that cost might be a little too much for me? And so you can look at, before you go and look at a property, you can say, hey, I'm thinking about, looking at this property, or thinking about making an offer on this property. And we can give you kind of a ballpark figure on what we think that insurance premium is going to be, so that you're not wasting a bunch of time on a property that maybe you might not want to pay that premium. So we're more than happy to do that for you anytime.
I appreciate that. Good point. Thank you so much.
Yeah.
How about you, Toni? How can we reach you?
Yeah, so my team can be reached at area code 561-207-8049. Our website is interconnectmortgage.com, and our email is teamtailor@interconnectmortgage.com. So super easy.
Awesome. Well, I really appreciate you guys taking time out of your evening to jump on this podcast with me and help to educate, because like we talked about before we even started, I mean, this is a wealth of information we just went over in about 30 minutes. And just with the information that we shared just now, it will save you a lot of aggravation, a lot of time, and money. So I really do appreciate you guys jumping on, and I hope you're going to join us again in the future, because this has been really great. Thank you so much.
No, thank you for having us. It's a pleasure.
You're welcome.
It has been a pleasure. Thank you so much.
Yeah, happy holidays and happy New Year.
Same to you, Andrew and Monica.
Thank you so much.
Hi, Toni. All right.
All right.
Bye.
Bye, guys.